everyone. Welcome to PayU Edge Live. I'm Mansa. PayU, as you all know, is one of the leading payment service providers. We are across sectors like airlines, SMB, and of course the startup sector. PayU Edge is a series of conversations around products, maybe products internal to PayU or outside. So today we have a panel of experts, Nimit and Nitin with me, talking about why affordability is a game changer. I have my colleague Neha, who is the senior marketing manager at PayU, who is going to be the moderator for this session. Neha, Nimit, and Nitin, thank you so much for doing this with us today. Over to you, Neha. Carry it forward. Thank you.
Thanks, Pansari.
Thank you, Mansa.
Hi and good afternoon, everyone. Thank you for joining us today. I'm really excited. We are doing this after a long time, but this topic is something which we all at PayU is close to heart, and we look forward to discussing it today. But before that, before the exciting conversation starts, I'd like to introduce my panel to you all. Nitin, Senior Director and Business Head for Affordability Business at PayU, and Nimit, who's the Associate Director, Product and Affordability Product Head at PayU. Thank you both, Nimit and Nitin, taking out time for us today. And just I missed on one part. Nitin has a great experience, 16 years experience, and he comes from a very strong experience and brands like starting from PayU, HDFC, Amex, and Pine Labs. And Nimit also has been working as a product manager for 11 years in good brands like PayU, Paytm, and FreeCharge. So once again, thank you so much, guys. Over to our topic now, which Mansa and you all are aware. What is the topic? Why affordability is a game changer. I'll set some context before we start, talking about it and jump into the exciting conversation. But right, like so, we all know Indian fintech space is really exciting. There are so many things happening from lending to payments to personal finance. So many exciting products are being built over the last 10 years. In fact, I was reading some recent articles which got published even like yesterday only, that lending companies have in India have seen growth of 40% CJR over the last 10 years. And this space has already seen an investment of upwards of 1 billion US dollars. That says something. That talks about how globally and in India, people are serious about innovating in this space, right? So all this, in the last 10 years, there's a lot of our regulatory bodies have encouraged us to build products, technology coming together, right? And the investments globally and in India, right? All this has led to, there's one problem which they are solving, is that how can lenders be connected with customers, the right customers, and actually interact when the customer is making a decision to purchase. Like traditionally, banks still at some level, right? Like personal loans, etc., are given, or when they have to hunt for audiences. But if we create a technology where the lenders and customers come together, I think that is where the heart of innovation is happening, and is now popularly called affordability, right? Affordability in English, actually, I looked at the dictionary meaning. It says ability to be afforded. I think that's what we are doing. That's what we are talking today, that how we have been changing this. So I've said enough. I can go on. So my first question to you, Nitin, is that what exactly is affordability? You are an expert in this, and why is it important?
Thank you so much, Neha, for the introduction. Pleasure to be here. Hi, Nimit. Pleasure working in PayU for the past 1.5 years. Really excited to be part of this conversation. So, Neha, I think you've briefed very well on what affordability is. I'll delve into that, but instead of going straight into that, let me give you a reference, right? So, imagine that you are a 22-year-old girl, right? You look 22, but right now, just imagine you just passed out of college, right? You've just done, let's say, your engineering or bachelor's, or maybe you have done your master's, and you've landed your first job. Now, all of us know that the first job the salary is not that high. Maybe you're making around 25,000, 30,000 per month, right? But at the same time, you are aspirational, right? You want to get the best of everything for yourself. Let's say a brand like Apple or OnePlus have launched a new phone. Now, all of us know Apple costs upwards of 1 lakh. Any new phone launch costs upwards of 1 lakh, right? Your salary is 25,000. How do you afford it, right? Now, gone are those days where you were dependent on your parents to, provide you pocket money to buy what you wanted, right? Now you are working, you have to fund it out of your own pocket. So how do you do that? So this is scenario one. Now let's go to scenario two, right? Now you're 30 years old, you're married, and you and your spouse want to go to a trip, right? You want to go to a foreign trip. Again, India is very aspirational, right? That is the key thing. The middle segment, the middle class segment is rapidly evolving. Their aspirations are evolving, right? Now, you've just got married. You want to go abroad for your honeymoon, to a place like Maldives and Mauritius. You go to a website like MMT, you try to find out a package, and what do you see? Right? I mean, you see that a 6 days, 5 nights package costs 4 lakhs to 5 lakhs, right? That beach resort or that water villa, right? It suddenly seems out of reach. So what do you do there? That is where affordability comes in, right? Now, see, typically we've always had products like home loan, which consumers take to buy homes because they are very large ticket size, right? You cannot afford it on your own. Similarly, on car loan, auto loan, and student loan, these are the traditional loan products. Now, in the last decade or so, what has become very popular is consumer durable loan, right? Which means that whenever you're making a purchase, whether it is online or offline, right? A product like a phone or a fridge or a washing machine, or you want to travel or something like that, that is where the affordability option comes into picture, right? Because for these purchases, you will not go and take a personal loan. Although personal loan is very common, but you'll not go and take a personal loan from a bank. So this is where we enable affordability options at the time of purchase for to make it easier for the consumers to buy that iPhone, or go to that dream destination for their vacation. Now, when we talk about affordability, also there are multiple form factors here. I will let my colleague and friend Nimit explain in more detail what are the various affordability form factors that we have.
Thanks, Nitin. And thank you, Neha, Mansa, for having us here. Let me dive into what all form factors, right? But before we get into form factors, I think what's important to note is that, customer is coming to make a purchase, right? So the idea for the customer is not to take a loan. The idea for him is to actually make the purchase as quickly as possible, right? So whatever payment experiences that we build have to be like as seamless as doing a UPI payment or a credit card payment, right? So keeping that in mind, whatever payment instruments that we are powering on the checkout page, we have to kind of be mindful that, we can't do a lot of, KYC checks. We can't do a lot of, traditional lending kind of steps that were required, right? So, but let me dive deep into actually what are the instruments. So typically we classify all our instruments into four large buckets. One is credit card EMI. So credit card EMI is basically if you have a credit card, you're eligible for a credit card EMI, right? So whatever limits that you have on your card can actually be utilized to take an instant loan, and you can convert that payment into installments, right? So credit card EMI is the most popular payment instrument that is used by customers. Then you have, banks kind of innovated in terms of, if customer doesn't have a credit card, what do we do, right? So banks came up with the product called as debit card EMIs, right? So what essentially happens in a debit card EMI product, and I think this is a common misconception which people have, that, for taking a debit card EMI, I need to have balance on my savings account, right? That's not true. So basically what bank does is they kind of look at the profile of their customers and create a list of customers who are eligible for a debit card EMI, right? So, and now whenever you enter your debit card number and mobile number on the payment page, like banks can quickly check whether you're eligible for getting a loan, and instantly a new loan is issued, right? So this is the difference between a credit card EMI and a debit card EMI. Credit card EMI, you have a line already, and then you convert that into installments. In debit card, a new loan is issued every time, regardless of what money you have in your bank account. It doesn't matter. Even if you have 0 rupees in your bank account, you want to take a loan and buy the iPhone or the OnePlus phone that Nitin was mentioning, you can do that, right? So that's debit card EMI. Then some like recently what we've seen is a shift towards cardless EMIs, right? And this is where both banks and new age fintech players have started coming up with installment products, which are where you don't actually need a credit or a debit card, right? So you can just come to the checkout page, enter your mobile number. Again, the bank or the fintech player will check whether you can be given a loan, and instantly you can make the payment with a simple OTP and get a quick line, right? So this is largely the installments space. This is not complete affordability. There is also buy now pay later, which I'll just talk about. But largely, if you have to purchase a large ticket size product, you don't want to pay instantly, you can convert that into quick and easy installments, either via your credit card or via a debit card or via some of the new age fintech and banking cardless EMI options, right? Now, what is BNPL? Right, so BNPL solves a very, very different purpose, right? All the EMI offerings that we talked about were large ticket size, converting them into installments. BNPL is usually for smaller ticket size kind of payments, because BNPL, as you would all be aware that the average limits that a customer get can be as low as 1,000 rupees till about 30,000-50,000 rupees, right? So the overall ticket sizes are low, but so there is an advantage, right? That the payment experience is actually very, very, very seamless, right? So the idea is, imagine wallets earlier, right? Like you could go to a QR code, go to a shop, scan a QR, just click in one payment and complete your wallet payment. BNPL is actually very similar, right? And I'll take another example. Let's say you're again Nitin's example, right? Neha has just come out of college, and she's trying to, she has a 25,000 salary, but let's say she's exhausted all of it, right? And this is towards the end of the month. Now, you need to eat, right? So you have Zomatos, you have to order groceries. So BNPL can act as a very good instrument to kind of cover those short transactions, small ticket size transactions like groceries, like food delivery, etc., to kind of cover the time till the time she gets her salary, right? So in a nutshell, four major form factors: credit card EMIs, debit card EMIs, cardless EMIs, and buy now pay laters for small ticket size repeat kind of transactions.
Thank you so much, both of you. You explained, like Nitin, you explained why then what is affordability, like the psyche behind having affordability, right? Like you spoke about aspiration that drives affordability, that drives purchase. So that made so much sense. And Nimit, thank you for explaining that there were so many affordability options. I think when I worked for a couple of years before I came to PayU, and I did not understand like there was a debit card EMI also. So a lot of consumer awareness is also critical to this. So, but as PayU, right, our main focus and expertise is helping businesses grow. So my next question to both of you, and Nitin, please, if you can, is that for new and upcoming businesses, right? How can they leverage this behavior you spoke about, the aspiration? How can they use that to drive business objectives for their business, for their own startups, etc.?
See, I'll again touch upon few things which we have already discussed, right? When Nimit has explained in great detail that there are two different kind of products which fall under affordability umbrella: the installment based products and the uh, quick checkout, buy now pay later based products, right? Now, how can businesses leverage this will depend on the kind of business you are in, right? So again, as he articulated, right, if you are, let's say, in a segment like grocery, you are in a segment like dining, etc., right, where you see repeat purchase behavior, right, where today you are purchasing something grocery, every second day you are coming to a platform like a Big Basket or a Grofers, and you're making those purchases, right? There we see high frequency, and buy now pay later is the most relevant product, because what you essentially want to do is give consumers the option to complete their transaction faster. These are usually small ticket sizes, right? So when we talk about affordability, the ticket size ranges from as low as 500 rupees to as high as 5 lakh rupees, right? Now, depending on what kind of business you are, what is your average ticket size, right? You may want to give your customers the right payment option that is available. So buy now pay later is typically something which revolves between 500 rupees to 25,000 rupees, right? You don't mind putting it on your, we work with issuers like Lazy Pay and Flexi Pay, Pay Later, ICICI Pay Later, etc., where you can just do a transaction faster. So segments like dining, grocery, pharmacy, etc., low ticket size, frequent purchases, you can do it on buy now pay later. On the other hand, when we talk about core installments, right, core EMIs, that is where you see segments like e-commerce, you have consumer electronics, travel, insurance, education. These are segments where affordability has generally been prevalent. Within these segments also, what we have seen is typically consumer electronics is where we have seen the highest amount of adoption. And as we go along during the course of this talk, we will touch upon why is it that consumer electronics has seen higher adoption. But as a new business, you want to increase sales, affordability is a must have, right? Whether you have low ticket size products like BNPL, whether you are medium or high ticket size product like EMI, credit, EMI, debit, cardless, which Nimit explained, all those products are relevant, right? Now, within e-commerce, there are subsegments like there are, apparels, there are footwear, furniture, all these segments are available. But what I really want to emphasize upon is that there are a lot of new segments also, where we are targeting, right? We are seeking out newer segments and newer partners to work with, right? So to give you an example, electric vehicles, we all know how the Indian government is very focused on driving adoption of electric vehicles to control the pollution, right? We have partnered with brands like Ola Electric, Yulu Bikes, to name a few, right? Where we are powering their, vehicles, EV sales, right? Now, any two-wheeler purchase has typically been driven by auto loans, right? So all the banks have an auto loans vertical, right? But with the help of technology, we have been able to make these available to the customers while doing an online transaction. So they don't have to go to a bank, fill out a form, and avail an auto loan, right? You go to an Ola Electric website, you select the scooter that you want to buy, and because there are EMI options available, you can opt for it then and there, right? So these new age, so like this only, any business that you are in, you have to decide what are the right products that fit your requirement or your customer's requirement, but it is a must have to have this. Now, another thing, Neha, is also very important is that as PayU, we have done a lot of innovation over the years, right, to make us the market leader in this space, right? And each of the segments also that I spoke about, right, they also have their unique set of requirements, right? Maybe a consumer electronics may have their own set of requirements. A travel segment may have their own, like that, right? But PayU has done a lot of innovation to become market leaders. I will request Nimit to touch upon some of the innovations that we have done in the course of the last few years, and why why we claim ourselves to be the market leaders in this space. Nimit, over to you.
Sorry, I was speaking on mute. Thanks, Nitin. I wouldn't know about market leaders. I leave that for business teams to decide. But typically, what we do, right? We Whenever we are thinking affordability, we try and divide all our features or new products or tasks into four broad categories, right? First and these four, I'll just name these four categories and then talk about each category separately. These four categories are coverage. So coverage covers your having all the maximum lender coverage and customers being eligible to take a loan, right? So coverage is one of the most important segment of work that we do. Then second is your experience, right? So as we all know, like success rate, having the right payment experience, having one-click checkouts, etc., is very important. So experience is our second charter. The third charter is where we do majority of our work is adoption, right? How can we grow business for merchants? How can we come up with new and exciting products so that merchants can find it more and more lucrative to take this product and grow their business. And last and foremost, which is most important, is compliance, right? This is a space which is under the lens of the regulator, and they're doing lot of, I would say, fast tweaks, right, to eventually benefit the end customer. So a lot of good work happening there, but that means that we have to be very fast and agile. And for PayU, we take compliance very, very, very seriously, and so it takes precedence over anything else, right? So yeah, these are the four broad charters. On coverage, I won't talk too much, but as we covered, right, the different form factors, we try to ensure that we are always having the right options. So we have 17 credit card EMIs now, more are on the way. We have 7 debit card EMIs, all the top banks. We have 6 plus cardless EMIs now, again, both bank and fintech players. And we have about 6 BNPL options, right? So the idea is to keep on growing this list. I keep getting requirements from Nitin ki every quarter, at least 4 lenders need to be added. A lot of pressure from there. So we're doing that, right? Second charter, which is experience, right? This is the bread and butter for us, right? This is why some of the largest partners of ours would trust us, like largest marketplaces, largest travel portals, etc. Trust us because we invest heavily on this space. So this is where, let's say, we have to make tweaks to get that extra 1% of success rate, right? This is where this is important. So I'll just quickly talk about some of the initiatives we had done. So on card payments, as you would all know, that a lot of drops happen at the last step, right? When the customer is trying to enter the OTP and trying to make the payment. So this is where we've come up with our native OTP solution, where the merchants can define their own experience and ensure that customer is not redirecting at all from their platform. So this native OTP is available across all affordability instruments, all credit card, debit card, cardless, EMIs and BNPLs. So the customer never leaves the merchant platform, and that gives you that additional 2 to 3% conversion rates, right? Then there is on debit card, cardless, as I mentioned, that it is the most important thing is that to identify which customer is eligible for loan, right? That is where we've built an API along with all our partners, and we have 100% coverage there. That as soon as you come and enter your mobile number, we can tell you exactly that you are eligible for an instant loan with these 4 or 5 partners, whichever are giving the customer the loan, right? So eligibility API, very important. When we didn't have it and when we had it, we've seen almost a 20 to 25% success rate improvement because of that, right? Then we keep innovating with features like no low code solutions, so you can take affordability on payment links. You can you have APIs for bin checks, etc. Right? So I won't dive deep here, but this is the second charter, which is bread and butter for us. We are day in, day out ensuring that we keep building the right experiences for the customer to be able to pay via affordability options. The third stream of work that I can call it is adoption, right? So I'll just take an example here, right? On our hosted checkout page, right? When customer would come, earlier the option was that he would click on EMI, select his bank, choose which tenure he's willing to pay for, and understand what are his installment amounts, etc., and then enter his card details to pay. So we said, hey, can we do something differently to kind of just improve discoverability, right? So that is where we launched a feature which is called as Card to EMI. As soon as you enter your card number on the checkout page, we quickly check if you're eligible for converting this transaction into easy installments, and with one click, right from the card screen, you can convert that transaction into EMI. Just this simple feature kind of saw merchants seeing adoption improvements of anywhere between 30 and 100%. So stuff like that we keep doing, right? We've built the offer engine. We'll talk about some of these more features in the upcoming questions, and talk you through that. And last again is compliance. So in the past, like a lot of compliance requirements have come in terms of like tokenization was there. All of us would know that it was a major change. Then recently RBI has come out with the new digital lending guidelines, where a lot of settlement changes and changes for how we communicate everything to the customer was there, and we ensured that we are fully there, compliant, right? As soon as the guidelines come, we get started and make sure that we are there. So yeah, these are the 4 broad streams of work, and
Thanks, Nimit.
yeah.
I think so. I'll move on to the next question. Our audience is also asking a lot of questions, so we have to cover that also. So you guys spoke about how can businesses use affordability to grow their business? Like how can it be built for them? Now, Nimit, you spoke about adoption. I think while businesses, we understand a lot of business still doing it, and there might be more questions, but I think what we need to discuss now is that what do you guys think is the lever that businesses take to drive adoption of affordability? What they should do to ensure that from customer side on their businesses, the affordability adoption increases, right? Because they're investing so much. If they invest so much in enabling affordability, how do they ensure that it is used also by the end customer? Nitin,
Right. So again, thanks, Nimit, for laying down the context. I think it was important for everyone to understand what PayU is doing, and because affordability is slightly complex. I mean, when I say complex, not for the consumer, right? There, as Nimit said, our effort is to make it very seamless and intuitive for the customers to drive adoption, right? But the entire product, the entire gamut of things that we can do in affordability, that is complex, and it's a continuous endeavor to keep improving on that. Now, as far as key levers are concerned, right? While Nimit touched upon few things, right? Coverage is definitely very important. Any customer coming to your platform, right, holding any kind of credit card or whatever, you do not want to turn away that customer, right? Because you're not providing that option. So there are cases where we have, because see what happens is credit card EMI has always been there. It's a more mature and stable product, right? Amongst the 4 form factors that Nimit spoke about, right? But out of those, credit card EMI obviously has a larger share. It's a more mature and a known product, right? But our endeavor, what happens is many merchants provide credit card EMI options to the consumers, but they do not provide other options, right? Like debit EMI, cardless EMIs, BNPL, and all that. Now, just to give you some numbers, total credit cards in India are around 8.5 crores, right, as per RBI data. But if we combine the pre-approved user base of all the debit card EMI partners, cardless EMI partners that we have enabled on our platform, that number would be in excess of 12 to 15 crores, right? So if merchants do not enable debit and cardless EMI, then they're basically not giving the checkout or financing options to a large portion of their customers. So that is point one. Second lever that drives affordability is no-cost EMI, or what we call as brand EMI. Now, just to explain to the wider audience, no-cost EMI is a program where the OEM or the merchant bears the interest that is charged by the issuer, right? So if you are purchasing a product worth 50,000, and depending on the tenure you have selected, let's say you've selected 12-month EMI, the interest comes out to be 5,000 rupees, right? Now that 5,000 rupees is borne by the merchant or the OEM, whichever product you are purchasing, right? That is a huge driver of affordability. In the earlier question, I told you that why consumer electronics is the number one segment, right, when it comes to affordability, because majority of the OEMs there understand that this is a key lever, and they provide options like no cost EMI, low cost EMI, etc., to entice customers to purchase. Because see, as a consumer, there are two things, right? One is what I spoke about in the beginning, that you are a fresh college grad, you want to take affordability options because you don't have money in your bank account, right? Second is a kind of consumer who may have that money in the bank account, so I may be able to fund that. But because I have this option where I can split this purchase into equal installment and not even pay anything extra for it, I choose to do that, right? It just makes my life very easy. It helps in upsell, right? So today, if I want to buy something worth, which is this is another benefit of affordability, by the way. If I have money to buy something which is worth 30,000, but because EMI options are there, because no cost EMI is there, right, I may end up buying something worth which is 50,000, right? So this is the second biggest lever which drives affordability. And third, very big, is the offers, right? Now in today's world, at least in sub-segments, we have seen that even no-cost EMI has become like a business as usual kind of thing. I mean, for consumers, it's like, okay, so this is there, now what next, right? And this is why you must have seen that typically during the sale season, right? Whether it is the festival sale or Independence Day sale, that is where we see maximum consumers, making their purchases, right? So why is that? Because that is the time where majority of the issuer, the banks, and the brands, merchant, they come together to launch lucrative cashback or discount offers for the consumers, right? So no cost EMI in coordination along with instant discount offers, these are the two key levers that have always driven affordability, right? And of course, there are a lot of challenges which we will discuss about and a lot of innovation that is to be done. But these are the key levers. I will again request Nimit to touch upon what exactly has PayU done from product side, right, to drive adoption with respect to these key levers that I just spoke about. Nimit.
Thanks, Nitin. And I'll try to keep it brief. Nitin, like as Nitin rightly mentioned, right, it's important that offers. Actually, I'll just put it as simply as offers drive affordability, right? That's a given, right? So that is where what we thought was that rather than merchants having to build the entire logic of having the discounting, do the complex calculations of no cost EMI, and having additional discounts, then having logics of which card will support it, which card will not support it. So what we did was we built a product which is called as Offer Engine. So this is a no-code kind of a product. So merchants can, if they're integrated with PayU for payments, or even if they're using like payment links of PayU, they can simply enable Offer Engine, create offers, and you can create all kinds of offers, right? You can create instant discount offers, you can create cashback offers, you can create low cost EMI offers, or even the complex offers like no cost EMI plus additional cashback, as Nitin mentioned. You can create it there. You can set your campaign rules in terms of ensuring that, what is your budget, how many times do you want to give the offer to customers, etc. Right? So you have the capability to control the campaign, how you would like to run this, and simply enable this offer, right? So now whenever the customer is coming to pay, he will automatically discover that offer, hence ensuring the adoption kind of is tilted towards that affordability payment option. So this is there. Obviously, there are a lot more things that were happening, but I wanted to just quickly touch upon the offer engine that we've done to kind of solve the adoption challenge. Yeah.
Thank you, Nimit. I think what you guys said made, like what you said just now, offers drive affordability. That made a lot of sense. I think that's the basic psyche, right? People are aspirational, but they're still looking for offers to shop, right? Even if that means that they get a no-cost EMI. So nobody wants to shell more money out of their pocket. So yes, that's a behavior which market has already tapped into in the past, and I think this is another same logic in a different scenario. So yeah, that makes sense. But I think as the industry, as affordability space, we've just touched the tip of the iceberg. What do you see, Nitin, now that are the next set of challenges? Because as you grow more and more in a space, there are challenges which come with the scale and volumes, right? So what do you see are still the challenges or new challenges which have come up now since you guys have been working for so long in this space?
Right. So I think some of them Nimit has already covered, right? I mean, more than, I wouldn't call it challenges, but continuous improvement areas like customer experience, right? Which is the core of what we do, right? Continuously enhance customer experience by way of SRT and all that. But Neha, to your pointed question on some of the new challenges that has emerged, I'll go back to again the form factors, right? We spoke about there are 4 form factors, and we mentioned that credit card EMI is a fairly mature and advanced product which consumers are aware about, and there is a natural propensity that if that option is available, and if no cost EMI is also there, then you opt for that option, right? But like I just said, there is debit card EMI, there is cardless EMI. Of all the 12-15 issuers that we have onboarded, right, and we are in process to do many more, the total pre-approved base is 12 to 15 crore. But the key problem is that customers are not aware, right? I mean, you yourself said in your starting note that you did not know what debit card EMI is. And this is a very common problem across the industry, right? While banks, what they have done is, of the total saving account base, they have run a filter, they've run some logic and approved certain segment of customers, right, who are pre-approved for the loan, right? But consumers don't know about that also. So the percentage of customers who are actually transacting on debit and cardless EMI is very low, right? So that is one of the challenges that we need to solve for. Second challenge is penetration in certain segments. So I spoke about some of the key segments where affordability is prevalent, whereas there are certain segments where affordability is required, right? But the penetration is very low. Specifically, if you look at insurance and education, right? These are segments where with high ticket size, insurance premium can go anywhere from, let's say, 10,000 to a lakh, right? Depending on your cover. Similarly, education, we know that the fees these days are extremely high, right? So these segments require affordability as a product, but the penetration over there has been low. And third bigger challenge, I mean, Nimit spoke about offers drive affordability. But see, what is seen in the front end is that consumer opting for that offer. What is there in the back end is the entire recon and settlement part, right? Because once you're in the online world, typically consumer life is easy because everything comes as an instant discount. So you are happy, you go walk away, your product is already discounted. But in the back end, there is an issuer, there is a merchant. The fund needs to be exchanged between them. Usually these offers are co-funded between an issuer and a merchant. The flow of funds need to happen between one party to another. That is a cumbersome process, slightly manual, and that creates friction in the process. So again, I will let Nimit speak about what we have done, what PayU has done to solve for some of these challenges.
Right. Nitin, as you rightly mentioned, discovery of instruments is one of the major challenges, right? And so when we were thinking of this problem, we were like, what is the time when customer actually decides whether I want to make this purchase or not, right? It's not happening on the payment page, but it's actually happening on the product selection page, right? So is there a way where we can actually influence the customer when he is looking at the product, right? And can we nudge him towards saying that there are affordability options available? Hey, if you can't afford this product with a one-time payment, you can convert it into easy installments, right? So this is where we kind of launched a feature which is called as affordability widget, where customers can discover all their eligible affordability options right on the product page of the merchant, and also look at all the offers that are there, right? So two things drive the purchase decision: whether you can afford it, whether there is a good offer. So the idea of affordability widget is that merchants can display this information on the product page itself, so that any of those customers who were not sure about whether they want to make the purchase or not can be converted and help grow business for the merchant, right? On the second problem, where you said that, I wouldn't say again call it a problem, but second growth area where some of the industries like insurance and education sectors, the ticket sizes are high. So obviously, if you convert that into a EMI transaction, the interest costs are also high, right? Similarly, if a merchant has to give a no-cost EMI offer for that, the subvention costs are also high, right? So, and a lot of times what happens is that customer says, "Hey, I want I want to make this fees payment. I have let's say 50,000 with me, but I don't have the remaining 30,000. That I need to maybe pay the fees for 80,000 rupees, right?" So that is where we are building a feature which is called as down payment plus EMI, where you can pay part amount as down payment and pay the remaining amount as and convert that into EMI, right? Again, what is important in this feature is that the payment experience remains as seamless as possible, because there may be two transactions. So a lot of innovation and a lot of thought has gone around how we can make this experience as seamless as possible, ensuring both of down payment and EMI transactions can be covered. On the last point, as Nitin had mentioned, that offers, like while it seems that it's an easy step for the customer, there's actually a lot of work that goes behind, because a lot of times these offers are not completely funded by the merchant; they are part funded by merchant bank, and this is where after the offer is done, entire reconciliation needs to happen. The funds have to be collected from the bank and given back to the merchant, right? So this is where we have we saw this as a challenge internally, right? And this is where we've kind of now automated our entire backend processes, where we can create necessary reports, both internal and external, and make sure that all the invoices, etc., are raised internally, and merchant has full visibility of when his money is going to come and how much money is going to come for that. Yeah. So these are the three things that that I wanted to kind of talk about.
Cool. I think we are out of time, and I think we are on time, not out of time. I think thank you guys, both of you. For the audiences who joined us late, I'll just summarize the discussion. We started with what is basically affordability, and Nimit spoke about the different form factors in it. Then we spoke also about how can different businesses utilize affordability and grow their business. What are the levers, specific levers they can drive, and the challenges which are happening, which are for future or still exist, right? So this has been conversation about. I'll just, I think I have a thought on this, is that affordability cannot be driven by one player. Like, it cannot be driven by just customers or just banks, which or lenders, so to say, right? It is an ecosystem. It mostly is of four kind of partners: consumers who are going to consume the product, merchants, businesses through which this will be offered, lenders who actually need the customers to take loans, and companies like technology companies like PayU who are building a platform, products to get this together. I think this is a very exciting space. It is evolving, it is growing. We all are dependent on each other. And thank you so much to both of you to bring this expertise today and share your thoughts with the audience. With that note, there are a couple of questions the audience has asked. Um, I will just, the first question which was asked is that what is PayU doing for new to credit customers in affordability space? Anyone, I would, if you
Yeah.
can take.
So I think we'll both answer part of it because we've actually been working very closely on this. See, first of all, let me lay down the context. It's a very relevant question. We spoke about various affordability form factors. We touched upon that there are 8.5 crore credit card, and then there are around 10, 12 crore debit and cardless pre-approved customers, right? But if you look at the unique customers, those who have a credit card as well as a pre-approved for debit, I think that would be around 15 odd crores, right? Customers who have access to finance. But then India is an emerging country. You have, the number of online shoppers and e-commerce has just boomed, right? So there is a large section of consumers who still do not have access to finance, right? And these are the ones who typically fall under the new to credit category, right? Uh, to answer your question, what are we doing about it? See, we are working on a product where we can underwrite a customer on the fly. I wouldn't be able to give too much details, but a high level insight, because this is actually a very complex problem to solve for, right? There are 2 3 factors which are very important and have to be considered while building this product. First is approval rate, right? I mean, while when the customer comes to the platform and they do not have a credit card or not pre-approved, right? The lenders that you partner with, they need to be able to, on the fly, check your, let's say your CIBIL scores, do your risk underwriting and everything, and whether and approve or disapprove you. Now, the program only works if, let's say, at least 70 to 80% of the customers who opt for this payment method, right, new to credit, get approval, right, or they are approved for the next step. So approval rate is very important. Second, and this is typically pioneered by Bajaj, right? I mean, in the offline space, what we call as paper finance, this is very prevalent. But in the online space, one has to understand that you are doing this while making a purchase, right? In the offline, there is a warm body who is sitting there to explain, collect documentation. In the online, everything is do it yourself, right? So the experience also has to be super seamless. If the experience is clunky, right, where there are too many steps in the process, you have to upload a lot of documents and everything, right, answer too many questions, then that creates breakage in the journey and customer is likely to drop out. So these are 2 important parameters, the metrics that we are looking at to arrive and build a product, a journey for onboarding new to credit customers. And Nimit, you want to maybe add something?
No, I think you've covered
Okay.
it. You've covered it quite well. Yeah, I think the biggest challenge here is going to be experience, right? In the end, customer has come to make the purchase, right? He's not come to take a loan. So like the journey has to be as simple as, again, when I say UPI has set the benchmark, right? So we have to make it as seamless as possible. Till the time we get that experience right, I think this is where we have to keep on working and come up with solutions. Yeah.
One last question, which is, in the light of recent regulatory changes and investment slowdown in lending space, what do you see? What do you think about the payment options? Like, how are they going to evolve, like BNPL, etc., which is the very important form factor these days?
That's a good question. See, I think as far as the regulator is concerned, I think the primary concern has always been safety, right? Safety and security of customers, their privacy, their data. everything. And as Nimit touched upon, right, these are one of the 4 key guiding principles on which we work, right? Compliance and regulatory are on top of the things. Any new guidelines, whether it is tokenization, digital lending guidelines, etc., which come in, we are the first to implement it, right? To answer that specific question about how do we see payment space evolving, I think maybe if you're like, let's say, referring to products like buy now pay later, which come under affordability umbrella, right? Typically, it's not an affordability product. It's more as a checkout convenience product. But the regulatory guidelines have an impact because you want to, on the one hand, give a super seamless experience, but at the same time, you want to prevent fraud. So it's about striking the right balance between giving a superlative customer experience versus making sure that it is not prone to frauds or anything like that, right? So what we are doing there, Neha, is basically working very closely with our issuer partners, right, to define the right experience for the consumers, which on one hand provides safety security for the customers data, as well as it is frictionless for the consumers, right? So our core guiding principle will always remain the same: safety, security, plus the right customer experience. So we'll continue to innovate, work closely with our partners to work on that. Nimit, you want to?
Just to add, yeah, I think I'll add. I think BNPL, according to me, again, it's maybe my personal opinion. I think BNPL is here to stay, right? Will we have, more serious companies working in the space? Answer is yes. Will we get more compliances in the space? The answer is yes. But if you think of it from a lender perspective, right? We were asked a question: how do we solve the new to credit problem? Right? BNPL is actually the gateway to getting a customer onto the credit journey, right? So if a lender has to give credit to a person who doesn't have a credit history, you have to onboard them on a very low ticket size product, right? And that is where BNPL. So from a lender perspective, BNPL adds a lot of value because it gets them customers into their chain, right? From an experience standpoint, again, it's very important, right? Because like erstwhile wallets were always doing well, or seeing adoption in low ticket size repeat kind of transactions because it was that easy, right? BNPL gives you exactly that experience without having to add money to your wallet, right? So I think BNPL is here to stay. I think there will be changes, but I think those changes are good for the customer, and I think we take this segment very seriously, and I see a lot of potential and growth within BNPL. Yeah.
Cool.
Yeah, and just to finish, Neha, see, like I said, right, I mean, innovation is something that is core to payments, right? It is not just affordability. Affordability is a sub-segment of overall payments, right? So PayU is, again, I would say, market leader in online payments, right? Affordability is a sub-form factor. And what our continuous endeavor is to drive more innovation to make things more seamless for the consumers. BNPL is just one story, right? I mean, even if we look at any other form factor, right, it is always going to be experience and safety going hand in hand, right? So we'll continue to innovate and bring new products, solve new use cases, new challenges to make it easier for our merchant partners and consumers.
Yeah, I think, Nitin, to conclude, I think these two things which you said, right? Experience and safety, they are bringing the best of innovation in India, and hence the growth story we started with. So thank you so much, both of you. It was lovely talking to you all. The audience has been kind. They've been engaging with us. There have been exciting questions. I'm afraid we can't take any more, but looking forward to having this session regularly and soon. So yeah, have a good evening, you all. And thank you so much for joining once again. Bye.
Thank you. Thank you so much.
Thank you, audience. Thank you for having us here.